From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 24th, 2017. In just a moment, we'll be taking a look at the GBPUSD, the Great British Pound versus the US dollar for today's trade analysis. But first, I want to recap a couple of the suggestions made over the past few days. We'll start here on the euro dollar. Yesterday's morning analysis video spoke about buying the euro dollar on a dip into the support zone. Well, we're looking at the pink shaded area at the very top of this 4-hour time frame, and you can see the historical resistance into this area that also helped us identify this area as a potential support. Not only did we have this pink zone, which is, by the way, between 1.0760 and 1.0790, we had this blue trend line coming up from the bottom of the chart. So we had two things there stacking together to give us confidence in that area's support. Number one, the blue trend line. Number two, the historical support. And of course, I think we could probably find some Fibonacci that aligns with this area as well. But anyway, we have a couple of things telling us that this was going to be support in the direction of the trend. So we went ahead and took the long yesterday at 1.0775. Currently sitting with about 32, 33 pips of profit on the trade. Definitely am going to look for this to target a little bit higher. I'm going to look for it to go all the way back up to this orange zone into the low. 1.0800 for our target for the day today. And of course, if it can break through there with any aggression, we'll look for further profit on the trade as it continues to move higher. We also have the AUD USD going from a couple of days ago. This is actually from earlier on the week when it was up here at the top of the chart into the green shaded area. It's been pressuring lower significantly. We're now sitting with 120 pips on the full extension of the trade. We've seen it down close to the 7,600 level, not all the way there yet, but definitely reaching our next targeted level, the purple shaded area that you see towards the top of the chart. So continue protecting profit there. One last trade, and this one's an unfortunate trade. It did get stopped out, but it's still a valid trade, I think. We were looking at this purple shaded area on the US CAD as an opportunity to go short. Unfortunately, I had my stop loss apparently 1 pip too close to the market because I got stopped out by about 1 pip, and now it's come right back into the purple zone. I took a short at the purple zone. It spiked above it enough to take us out, and now it's come right back down into it. I still think that this is a valid area to trade from right here into this purple shaded area. As long as it's in it, we look for it to go down. We do have some Canadian news coming up, CPI data coming up at 8:30 a.m. Eastern U.S. time, so you want to pay attention to that. But then if it's still bearish, if it's good news for Canada, by the way, look for this to continue to pressure lower. We do have core durable goods out of the U.S. as well, so keep an eye on that. We're still looking for a breakout of this purple zone on the U.S. CAD. All right, moving on over to the GBPUSD. We're in an uptrend. That's the blue trend line on the right-hand side. The black trend line was a downtrend. The blue trend line's an uptrend, so that's not too hard to see. The 100 period moving average, we're just above that as well. So we have this upside expectation right now for the GBPUSD. So if we're going to buy this in the direction of the trend, there's two reasons to buy anything. We buy it on dip to support or a break of resistance. Let's go ahead and zoom it in one more time here on the daily time frame. So as we look at it, we have the blue trend line giving us an uptrend bias. So if we're going to buy it, it makes sense to buy it on any dip close to that blue trend line, which happens to be right on top of that orange shaded area as well, 1.2480 down to 1.2455. The risk in that scenario, of course, is that it breaks under the orange zone. Let me give you a good example of this. Let's go ahead and go on down to the 4-hour time frame. And right here where the black circle is a very, very similar situation, isn't it? We saw the market sit on top of the green zone, hit the yellow zone, come back to the green zone, and then made the new high. So if you look at that black circle, wow, isn't it just so similar to what we're seeing happen up here at the orange shaded area? It got on top of the orange zone, hit the green zone, back to the orange zone. So for the day today, I'm looking for the market to stay on top of here, 124.80, a repetition of what we see exactly happening here inside the black circle. We could even put another black circle up here at the top of the chart if we wanted to. Of course, we have the blue trend line coming into play to give us higher confidence in this as support. If you're looking for a buy, I think the orange shaded area, 124.80, or just above would be your opportunity to get into it. Your risk or stop loss should go underneath the orange zone, so that way if it does indeed break underneath it and underneath the trend line, you have minimized the potential impact to your trading account, and then you look for a new trade. So your stop losses are under the orange zone. We buy on top of the orange zone. We target the green zone or higher in the direction of the trend for the GBP USD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.